Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Today is Take Back Friday, June the 1st, 2018. I will try to make this quick with our weekly wrap up. Time is pressing, so I can't go into a lot of details about a lot of different things. There's so much happening in the world. So I'll just stick to a few chart things I just want to point out to you guys. All right, you're going to really want to pay attention to this week's price trigger report, which was just sent out. I just uploaded it. So those of you that subscribe to the weekly post wave price triggers, it should be in your inbox, the complete full sheet. And you're going to want to pay very, very close attention to this week's price triggers and the rally and crash alerts. Very, 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 very mysterious patterns have developed this week in the price action. And we had a algo shift, albeit a pretty major one. And so trends and micro trends have shifted. I know there's a lot of economic news. There's things in the news with Deutsche Bank and things happening in the Eurozone, things happening in the USA. There's just so much happening in the world, and it can be quite overwhelming. But I'm going to point out to you that everything that can be known, is known, or will be known is already factored into the price action. One of the things that came out this morning with the jobs numbers, it's very interesting that the infighting with the powers that be has gone to new levels. So those that want to be in power are trying to take down those that are in power. All right. So they want to make an issue about Donald Trump giving out the jobs numbers, beforehand because he tweeted something like he's really excited about the jobs numbers, like hinting that the numbers were going to be good. All right. So the media storm around it is like, oh, he should be, prosecuted. He should be arrested. He broke the rules. He gave out the information beforehand. You're not supposed to do that. All right. Let me just cut through all that fluff for you right quick because it does have grave importance. See, most people who watch MSNBC and CNBC, Bloomberg, whatever, most people who watch any kind of business TV, they don't know they don't understand what goes on behind the scenes, and they don't know. And it's not the public's fault that they don't know. The media knows better, and they know exactly what they're doing. All right, they have an agenda. Whether you like the president or not is irrelevant. What matters is truth. The truth is that he did not leak the jobs number beforehand. Tweeting that he was excited about the number, or even if he tweeted and said that he is worried about the number, has no bearing on the outcome of said report. Regardless, markets rally on bad news. Markets rally on good news. Markets crash on good news. Markets crash on bad news. So it does not matter what he tweeted. It would have no bearing on the market whatsoever. Price action is going to do what price action does. Now, if you want to get into the legal ramifications of the situation, the truth is the President of the United States, Donald Trump, did not break any laws. Whether you like him or not, whether you voted for him or not, doesn't matter. The fact is he broke no law. Reason being is because he did not give out the numbers of the report. He did not say if it was a good report or a bad report, just that he was excited about the report. Now, whether he was given the report ahead of time is also of very little significance. The reason that it is of very little significance is because for the right price, you can buy the report up to 5 minutes before the announcement, and in some cases, even before that. All the major exchanges have said benefit if you're willing to pay up, you can get that information before the public gets it. And yes, it is legal. They've been doing it for many years. All right. It goes all the way back to the T1 lines before we had the high-speed internet the way we have now. You had special lines you could have with feeds into the exchange, all that good stuff. We had data feeds back in my Wall Street days. We had data feeds. They were extremely important and extremely expensive. Before it became popularized in the 2000s, we had direct line into the trading pit. Before they called it squawk and all that, we had direct feeds. You had your broker sitting right there in the pit, and the microphone was on. You could hear everything that was going on. He was telling you the things you couldn't see. He let you know what was going on, and we could make determinations based off of that. It is all legal. It is not illegal. Furthermore, it is also not illegal for those in public office on Capitol Hill to do insider trading. All right, they are exempt from those insider trading rules. Did you know that? That's right. They can do insider trading. It's legal for them to do it. You can't do it, but they can do it. Believe it or not, they are exempt. They can do insider trading. This situation is not a situation at all because there is no insider trading and no proof of any benefit. The thing about these reports, they're treated like commodities. And what I mean by that is insider trading when it comes to the commodity markets does not exist. There's no such thing as insider trading laws of commodities. It doesn't matter if you know what the report is going to be ahead of time or not. It's not against the law. The reason being is because you don't know how the market's going to respond to any kind of news or report, because markets are, especially in the commodities, have been known to rally and crash on good and bad news. That's the thing. You don't know how the market's going to respond based on news, and that's just how it is. So the jobs number is no different. It's treated like a commodity situation, like a grain report or something coming out. Who cares? All right. It doesn't matter if you know exactly what the numbers are going to be before they come. You don't know how the market's going to respond, period. So in that regard, no law was broken. Nothing happened. It's not news. It's just that those that do not like him want to get him out of office any way they can. They're desperate. They're reaching now. They want to impeach it, but they have nothing to impeach him on. All right. I won't go into the whole Russian thing because I don't have time. But suffice it to say, the collusion was not on his part. It was on the Democrat part. If you turn over the rocks and leaves at the DMC, you will be quite astonished into what you find. All right, it had nothing to do with the Republican side of things. It was on the Democratic side of things. And this is a known fact going back decades. But we won't get into that now. I'll probably have to do a special video on that, or another documentary or something when I have time. All right, so I just had to get that out the way. They want to be accused of not dealing with issues that affected the market today. All right, now let's just end this off like this, okay? For the most part, everything is consolidated. Nothing broke out, nothing trended. All the markets are in the same exact position. And I'm going to show you what the algos did so that you can understand what I'm talking about. If you don't understand, you will, because Lord willing, in the coming week, I'll be putting out a whole bunch of videos going into a lot of different topics. Okay. On this daily chart of the Dow Jones Futures, I want you to take a look. This is the mega bar right here that was on May the 29th. These are the subsequent bars thereafter. Notice that we traded inside of this candle's real body for the entire week. Markets did not close outside of the lower part of the bar or the higher part of the bar. We traded within this range. Price action was stuck in this range. Notice how the algorithms kept the market at bay. So sell, buy, sell, buy. Short, long, in that order, and did not break the pattern. This bar is Friday, that's today. This bar is inside of this bar, which is inside of this bar, which is inside of this bar. All right, this is a flag type of a pattern. And for price action to go exactly like it did like this is kind of rare. You don't really see that happen a lot. I can go back. You don't see this pattern repeating. Not that often. I'm going back here. You still don't see it. Pattern's not there. You don't see it. You don't see it. You don't see it. It's a very rare pattern. But when you do see this pattern, funny things are happening. Normally when you see this kind of a flag pattern like this, sometimes you'll see the spike lows or highs nip the following bar. This time you didn't see that at all. You literally see this range inside of this range, inside of this range, inside of this range. So this was an inside day, which was followed by this bar being an inside day of this bar, followed by this bar being an inside day of this bar, which is an inside day of this bar, which is an inside day of this bar. So price action went absolutely nowhere and stayed within this harmony. This is a harmony. All right, this is a very sophisticated type of a pattern. And then you get to where you're at the shortest bar, and then that's where the breakout happens. You can have a false spike breakout that reverses and then breaks down. All right, I'm going to show you what it's going to look like to the best of my ability. I propose that probably Monday you'll get a spike up like this, but then the bar is going to end up like this, followed by another bar that looks like this, followed by another bar that looks like this. All right, now I can only tell you what the order types look like in the market depth. This is what is being suggested that's coming. The reason why it's coming or all that is out of my purview. I could care less. I'm just telling you what it's looking like price action is happening for equities, for the stock indexes coming up. Within the next 3 to 5 days, you're looking at this. You're looking at shaving off at least 1,000 points or more in the Dow futures. All right. Barring some unforeseen event that I am not privy to that could possibly change this, but for right now, this is the pattern. This is what's coming. A spike high that takes out these 3 bars here, but not this one. And then same day intraday just reverse and just fall down. This is the only thing I could compare this type of a bar right here, this bar here, to is the May the 6th, 2010 flash crash, where it looked like everything was all right, then all of a sudden the bottom just fell out. So this is what's coming, folks. This bar here, according to what the price ladders and price charts look like, this is what we're looking like. This is what the algos are suggesting. All right, this is stuff you don't get to really see on a chart because this chart is not showing you. This is within the market depth. This is what's going on in the put call ratios and what's happening in the options markets and things of that nature. Now all this can be canceled out come Monday morning if the market's up a little bit from Sunday night. All right, so that could change things just a little bit if those orders are killed. And you know they're instead of cancel replaced, those orders are just canceled, then there's no level for the market to spy. So you might just get a small bar like this one here. See how small this bar is and this bar here? You'll end up with this if those orders are canceled on Monday morning after the opening bell. You'll get a little bar like this for a day. And then all bets off, this pattern doesn't come. But if not, if you don't have this little teeny range come Monday opening bell, you're going to get this bar on Monday before the day's out. All right. And I'm sure the press will have a field day with it, call it a Black Monday, even though it's not technically that, unless the bar here is wider than this and becomes parabolic. Then they'll call it that. But for right now, this is what we're looking at. All right. So I just had to show you that real quick. I didn't want the video to be long, but I had to just address a few things. I just want to give everybody the heads up. For those of you that subscribe to the weekly pulse wave price triggers, you already got the full throttle. You know everything that you need to know. Just pay attention to those readings, to those technicals, and make sure that you are placing your orders correctly. All right. So if you don't have this, you're not a subscriber to pulsewavetrading.com. That's where you need to go so that you can be ready to rock and roll and know what's coming. You got to know what's coming, folks, and you got to know how to handle it. And that's what the price triggers are there for, just to help you so that you can be on the right side of the market before moves come. All right. Trying to chase a market after a move has happened is a loser's game. You got to be able to know what's coming and what to do about it. So with that said, I got to roll. Lord willing, we'll pick this back up in the week coming, and we'll be able to deal with a few things that I want to address. All right. So with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.